Welcome to the Pulse Check podcast. Andreas, good to have you on board.
Pleasure to be here, Salomon.
Yeah, Andreas Mettenberger, the managing director, also head of Hong Kong at Synpulse, but also the advisory expert, which will for sure be a topic for today. But before we go there, you know that I typically want to open with an icebreaker. Andreas, tell us something that is unique about you that makes you you.
Yeah, maybe something that a lot of people don't know about me is that I like to cook. So typically I'm limited to cook on weekends, just because it's typically also quite time intense. So doing the groceries, doing the cooking, etc. But I think it's a good way to de-stress, to relax, and then obviously enjoy a good meal.
I never knew about this up until now, so I hope I get invited once to a good dinner. From cooking, maybe a bit more to financial services, talking about a good meal as a wealth management private banking customer. Let's start with explain a little bit more about what is a value proposition for a wealth management client. How do you define that?
So value proposition that a wealth manager provides basically consists of, the product offering that they have. So what products, what services are available to their clients. So this ranges from investment products to lending products to other non-financial services, which basically make up the overall proposition that a wealth manager offers to their clients. And obviously the value proposition is then also the key differentiating factors that wealth managers have compared to the competition.
Yeah, we had that conversation a couple of times here before, especially in an Asian context, as we sit both in Hong Kong. I mean, are clients really willing to pay for service, or are they more looking at the product? And again, I compare it typically to tailoring of a suit. It's not just about the fabric, of course, it's also about the tailoring and the advice of what may work with my personality, what suits my style. But all of that is not only a human problem or a person who needs to understand the client. It also comes maybe with technology, the platform. So maybe you can also enable or quickly elaborate on what are some of the technology capabilities also relationship managers, advisors may need to really provide a holistic advice, the right value proposition.
Yeah, absolutely. So looking at it from a technology perspective, there's multiple layers, right? So there's basically what the client can see. So that is, if they have their mobile phone, if they have their internet banking access, or if they walk into a branch or the branch itself, which is not technology, but, infrastructure. But all of this also makes up what is the value proposition of the bank. Obviously, behind what you can see in the front, there's also a lot of middle office and back office capabilities. You have your core banking applications, you have your portfolio management systems, etc. All of the logic which is typically in the back end, which then delivers the services to the front end. So there's a multitude of capabilities along the end-to-end value chain, which starts before a client even is a client of a bank. So the prospecting of a client, there's technology solutions which can identify which are the projects which have the highest propensity to onboard to a financial institution. Then the whole client onboarding. Couple of years ago, especially if we look at the private banking side, all of this was done completely manual. So it took multiple weeks to onboard, maybe sometimes even months to onboard the private banking client to an institution. These days, it is almost considered a commodity that I can just download an application on my mobile phone as a retail client, do that client onboarding within 2-3 minutes, basically, to open a standard banking account. And then obviously if I want to get into investment services or I want to become a private banking client, then there's some additional steps required. But there's a lot of technology support, which also during COVID, which basically made it a requirement to continue doing business, which emerged over the last couple of years. And the value chain obviously doesn't stop with onboarding. Then there's financial planning, understanding your customer, creating investment proposals, doing portfolio construction, ongoing monitoring, etc. So across the end-to-end value chain and the service offering that a bank has, technology today is a key enabler, and also a differentiating capability that they now have to differentiate.
Do clients really realize that immediately, that this is a differentiator? I mean, how do I really, as a customer, see that additional value that the platform creates? What are some of the immediate impact generated for me?
Yeah, maybe I have a personal experience here, which would be a good proxy. When I came to Hong Kong 7 years ago, I obviously also needed a credit card. I opened a bank account with one specific bank in Hong Kong. I'm not mentioning the name, but the user experience on the mobile application was very poor. Whenever I had a problem, I couldn't solve it myself on the mobile application. And I had to go to a branch, and there, as you know, sometimes you need to wait a long time. You need to get a ticket before you actually get served. And then if you're lucky, they can actually solve your problem at that point of time in the branch. If you're less lucky, then they can't. So what did I do? It wasn't a satisfactory experience. So I went across the street. I opened a new banking account. Everything went smoothly. The mobile application looked a lot more modern. I had a lot more self-serving functionality. And I basically, in the same week, I closed my other account, moved my payroll account and everything to the other bank. So in short, yes, I do believe that customers notice, differentiating offerings from a usage perspective. So if you have your mobile application, you can do what you need to do there, then that's definitely a big plus. And I think also, especially if you go into wealth services, where it's not just payments and simple transactions, but you actually want to get access to the expertise that the wealth manager also offers. There, what has also become a lot more important over the past couple of years is a proper omni-channel experience, so that you can choose yourself. What do you want to try yourself? What do you want to do yourself? And then at the point of time where you need help, or where you want to get input from a relationship manager, that's where you get in touch, and you don't need to start from scratch, but they can basically progress where you left off on your own. And then you can get the insights and you can continue yourself afterwards again. So that it's really up to the customer to decide when they need help, what they need help for, and that it's a basically unified experience for them across all of the channels.
One element for this is for sure also really understanding the customer, and the worst feeling as a customer, at least for me personally, is if you feel that you're immediately put into buckets with the typical client segmentation banks undertake. And of course, people are actually not just in one bucket. Even high net worth, ultra high net worth individuals are also retail customer to some extent. They also need a credit card and so on. And you may also have your business, or you're also a business banking customer. Maybe we can also jump to that challenge or opportunity that banks have, in a sense of how they segment their customers, and how this may also be evolving right now.
Absolutely. And I think the reality today is that the dominant model is still, you segment your customers based on AUM. So how much money do they have with your bank? And that's how you segment your customers. And that's also then how you assign your value proposition. So as a retail customer, these are the products that you get. These are the services that you get. As an affluent customer, this is what you get. You get a package. And then as a private banking customer, the reality is that, as you say, every private banking customer is also a retail customer somewhere, right? They also have credit cards, they also need to pay their bills, so they also need basic payment services, etc. And I think this is where universal banks have a significant opportunity. If you look at client acquisition for universal banks on the private banking side, roughly half probably of the new AUM that come in, they are internal referrals. So this can either come from the corporate banking side, or it can also come internal referrals where maybe a customer has started off as a retail client. Maybe when they were a student, they opened an account with that institution. And then after they studied, they went into the workforce. Maybe they became entrepreneurs and suddenly they got a lot of wealth. And they grew basically with the bank from a retail banking customer to a private banking customer. Unfortunately, what we still see being the reality today is that a private bank and retail bank, even for universal banks, from a customer perspective and also from an internal perspective, they almost operate like two separate banks. You have different platforms, different capabilities, different operating models across the two institutions. Oftentimes, you cannot even get a consolidated view of the assets that you have on the retail side, the loans that you have on the retail side, maybe your mortgage, and then your investment products that you have on the private banking side. And I think this is an opportunity for universal banks where they can really differentiate maybe compared to the pure plays, because they don't have that view, the whole of wealth view, because they will only capture the investment product side potentially, or the philanthropic side that customers want to do. So I think there's quite a bit of work required for those banks to provide that to customers, especially if most of my assets are with that bank. Obviously, many high net worth clients, they're also multi-banked, so maybe bringing in also assets which are with another third party offering that service. All of these are typical client demands, which still I think it's lacking in terms of what the banks are actually offering to their clients.
I mean, this is a very good element. I mean, that holistic view that is important for the customer. I mean, we don't like it if a bank offers us a product we are clearly not interested in, only because maybe they don't know the full holistic view of where you're in. But also in the other direction, of course, banks want to see the potential in terms of share of wallet to bring more of what you're doing to their book. And that all comes to that holistic view of capturing data. Maybe here in the element of data, first of all, just data management, data capabilities and so on. What do you see wealth managers doing today, and maybe also opportunities that are currently missed, but would be brought with better also capturing of data or leverage of data?
I think generally, I think banks obviously they have a wealth of data available. Most of the banks have also invested quite a bit of money and time into making that data, firstly cleaning up the data, making the data accessible in common warehouses, etc., where most of the systems can feed in and basically pull data from. But I think even from a business perspective, if we look at the end-to-end value chain, so after you have onboarded the customer, most of the banks, they immediately go into product recommendations. So I know this is your risk profile, I know this is your knowledge and experience that you have, then I know this is my product universe that I have available. Maybe the bank has some internal KPIs and initiatives where, product of the month or product type of the month, and this is being basically distributed to clients. But most of the banks miss the key element of understanding the client first, and then providing recommendations based on what is the client situation, what are the client's needs, and what would then be the most suitable holistic recommendation of the bank. And it is very easy, or it is much easier to capture and get that information from a client if you can show them, okay, look, this is the value that you can get on the back of it. So a lot of banks, they still have paper-based forms, or they have a checklist on their system, where they have a couple of questions like, what is your income, where do you have assets, what are your insurance products, etc. But it doesn't necessarily then translate in a visible way for the client into a recommendation, because no matter what information they provide, the product is always the same that they get at the end of it. So if you also look at one of the key challenges, or what is really the differentiating service offering that banks still have, it's not your products typically that you have on shelf. So whether I buy a fund from Bank A or a fund from Bank B, it's typically very similar, right? They all invest in the same stuff. Maybe the expense ratio is slightly different. But in the end, the products are roughly the same. And that's also why you see, from a margin perspective, where do they actually see margin compressions and where can they defend their margins? On anything execution related, you basically compete with brokers, you compete with everyone, so there's very little money to be earned there. So your differentiating capability is most likely on the advisory side. So either the human touch that you offer, so what is the expertise that you have available in-house? So if you have experts about specific markets or specific asset classes, which can have an in-depth discussion with you about structuring a portfolio, then that's a differentiating value. And where does the financial planning come in? And also there again, technology plays a big aspect. And again, I would say universal banks, or also banks which even have an insurance arm, they have a natural benefit, because firstly, if they own the transactions of the customer, so they are the payroll accounts, the credit cards, all of the expenses, etc., go through that bank, they have all of that information available, which can automatically feed into the income and expenses, which is a part of the financial needs analysis, right? Understanding what is available, what's the savings which are available, what are the insurance products that they have available, what's the MPF maybe that they have available, etc. So all of that allows to do that holistic planning. And from there, once you have all of that data available, you may even know that the customer has a goal to buy a house in 5 years. So okay, maybe in 4 years, it's a good time to reach out to discuss mortgages, if that's something that you offer. If you know that there's a retirement planning, if you know that maybe somebody has health issues, so there's insurance cross-sell opportunities, all of that information can be made available to the institution as a whole to cross-sell and upsell to the client, but not just for the benefits of the bank, but also for the benefits of the client, because they may not everyone has high financial literacy and they are able to make all of the connections. They understand how insurance and wealth is connected. So having a sparring partner and an advisor in the bank, that is where the bank can add value. Because otherwise, if I know all of it, or I don't get that conversation, then I can just go to a broker where I get much lower cost and I can just do my trades there. So I think the banks need to identify where do they add differentiating services, where are their strengths, and there they should then of course also invest into technology capabilities to support this and deliver it in a differentiated way towards their client base.
And taking one step further, of course, starting with you have all the data and you see also the same data as a relationship manager, via also what the client sees. How do we see now the trends in artificial intelligence, AI, maybe help contribute to further efficiency gains for RMs, or maybe also even in terms of more innovation, additional added services towards the clients? What are some of the trends you see?
Of course, AI is a buzzword, so there's no podcast without AI being mentioned, I suppose. But the reality is that most of the wealth managers, if not all of the wealth managers, they are, of course, looking into AI use cases. They also see what are the efficiency gains, etc., which can be achieved in other industries. And there's always two objectives, I suppose. One is to look at the cost side, and one is to look at the income side. From what I see where we stand at the moment, I think banks and wealth managers are typically still looking at, okay, what are the most relevant use cases to apply AI. So there's obviously always a lot of investment cost upfront. So you need to invest into infrastructure. You need to the whole data management, data governance piece, which is a precursor to AI. So if you don't have proper data available, then you also cannot reap benefits of AI use cases. But as you say, I think the typical use cases are internal use cases where you have efficiency gains. So we know, for example, that in wealth management, a preparation of meetings takes up a lot of time of relationship managers and assistants. So this can be 30% of back office costs just to prepare meetings, right? So understanding the history, looking at the portfolio, understanding what could be optimized, etc. So all of this, this is definitely a clear AI use case. We see other use cases which, knowledge database, so going through vast data to understand, okay, what are cross-border rules, for example, for specific transactions, for specific clients. So most of these are internal faced. We still see a bit of hesitance in terms of putting AI towards the customer, besides the chatbot, right? So chatbot, again, is a use case which is relatively straightforward, where you can start with a chatbot and then when necessary hand over to an agent. But in terms of, for example, providing investment recommendations directly to a client, we don't see that being materialized at this point. I think also because the regulatory environment is still a bit unclear. And of course, there's always the point around explainability of AI models. However, actually, AI, I think, also helps to, especially Gen AI, where you basically put rationale, etc., of maybe rule-based engines into text format to explain it to a client and explain it to a relationship manager. I think we had a couple of use cases which emerged already a few years ago around robo-advisory, right? So algorithms which present investment ideas, investment proposals at a click of a button. So what emerged is that for the affluent segment, where typically relationship managers sit live with a client to go through a portfolio proposal, the relationship manager basically sits with the client, clicks on a button, gets an investment proposal on their screen, first time he sees it, and immediately needs to explain to the client who sits across from him, why is this recommended, right? So you cannot first go through all of the analysis, take 10 minutes to see what was actually recommended, but you immediately need to explain it. So with AI, you can basically put something in key bullet points. Okay, this was recommended because it improves the portfolio health score by X. This was recommended because it aligns with the customer's investment preferences, etc. So it's actually also enabling use cases or simplifying use cases which already emerged in the past on top of additional use cases which now just come up through AI. So I think there's a multitude, achieving operational efficiency, increasing productivity of relationship managers, and I think the next step would then also be, once some of the models become more mature, to also find more direct-to-customer use cases when it becomes more accepted and more proven in the industry.
Maybe as a consultant, trusted advisors for many universal banks, but also boutique private banks and so on, what are the different approaches you see? As you just elaborated, there's a lot of investment happening into technology, into AI. How can these banks approach this from a procurement, sourcing, strategy point of view? What do you see?
I suppose typically banks have the choice between building it themselves or buying a third-party solution. And if they go for a third-party solution, then they typically, and of course there's some mixed approaches, but either they go for a one-platform approach, which has benefits of you have one tool across all of the capabilities. So that means you have lower integration costs, plus you have one front end which basically goes across of it. So it doesn't look as a relationship manager or as a client that you actually have to access multiple systems to go through an end-to-end user journey. That is one approach. Or then the second one, if you buy, is a best of breed approach. I think this has also become more established because of the fragmentation of the end-to-end value chain. So if you look at the fintech and regtech universe available today, there's hundreds, if not thousands, of vendor solutions. Some of them really just focused on a very small part of the end-to-end value chain. So this could be an AML KYC solution, it could be a prospecting solution, it could be a portfolio optimization engine, it could be a financial planning solution, etc. So they really focus only on one vertical of the value chain, but they have a lot more depth there compared to a, say, one platform where they need to spread the resources across. The drawback, obviously, if you go for a best-of-breed approach, is that there's multiple systems that you need to integrate. Integration is always an execution risk, so a lot of things can go wrong. A lot of experience is required to orchestrate and integrate all of these solutions. But I do believe that, especially if you want to have a differentiating position in the market and you have certain USPs why clients are banking with you, I'm not sure whether there's a way around using specialized tooling, because otherwise what you can offer to the client is just not, it's not providing enough depth if you go for a high level solution. So having said that, there's also new vendors out there, obviously, which understood this and which are focusing then also on basically providing the best of both worlds. So having a best of breed platform where we can also reduce the orchestration risk and the integration risk of all of these individual platforms. And also at the same time building that unified front-end experience for the end users. So be it the client, be it the relationship manager, what they want is the one platform feeling, but they want to have the capabilities which only the best of breed platform offers. So this is where we see the future, because we don't believe that that fragmentation will go away. Actually, we see that it's probably going to get further fragmentation, and that really, it's ranging from outsourcing also of capabilities, but that the bank really focuses on their core capabilities and then uses third-party tooling or processing to deliver those capabilities to clients.
Thank you so much. We are coming close towards the end. Maybe if you could summarize how wealth managers need to approach the journey of really creating most value towards their wealth management clients. How would you put it into a few simple points?
Yeah, absolutely. So I think one common pitfall that we see also with requests from clients is that there's two aspects. One is the value proposition and one is the platform. We see a number of players which start with the platform without really understanding, because sometimes, especially if it's technology related, then it's driven by IT, so it's not necessarily business driven. But ultimately, wealth managers should start with understanding what exactly is the value that they offer to clients, what are the differentiating factors, and based on that they derive what are the capabilities from a platform perspective that they need to deliver that in the most effective and most differentiating way to clients. We've seen multiple client requests where they go into a procurement of a platform, and then towards the end of that process, before they select the vendor, they realize, actually we need to go back and look at our value proposition, and they may have just lost 3 to 6 months, which nowadays is quite a long time. Mm-hmm. If you lose 6 months, somebody else will launch the capability first. Maybe you miss the first mover advantage, and you lose clients, which either prospective clients or existing clients that you have, because they get a better service, a better platform elsewhere. So our recommendation is to start with the value proposition. Take the time, because that is really your value that you offer, as the name implies. So take enough time to define that proposition, and only afterwards go into the procurement of the platform. That's point number one. Secondly, as I also mentioned before, I think with emerging technology, the scalability that it offers, also rethink the service model that you have. So just because you do something today in a certain way doesn't mean that this is the best way of doing it going forward. So the whole client servicing model, just because you assume today that a private banking customer, he is in private banking, so he must like the face-to-face and the human touch. Otherwise, he wouldn't be a private banking client. But actually, if you ask the clients, they would like to have the flexibility, because AUM is not driving customer preferences. Mm-hmm. Maybe they want to never speak to a relationship manager. If they could, they would do everything themselves through digital channels. Most likely they want to have that hybrid approach. So also review existing operating models. Don't think what you do today is future proof, and also challenge existing frameworks. That's point number two. And point number three is what I mentioned before already. Use technology really to accentuate the USPs which you already have as an institution. So, for example, if your strength is a specific asset class, then procure and provide capabilities which enable that even further, right? So if you have a specific clientele, if you have family offices and external asset managers, for example, maybe it's a good idea to offer them direct access to your platform as well, because they have the expertise. They don't necessarily need the advice, but they need access to a sophisticated platform. If you are strong on research, make sure that that research goes to your customers as effectively as possible. So don't just drown them with 40, 50 page articles. There's plenty of software and capabilities out there which summarize that, send snippets to clients, provide a sentiment analysis. It can do matching of customer preferences with research articles. So find the right tools which map your capabilities and differentiating capabilities, and invest in those instead of having everything.
Thank you, Andreas. Very insightful. So everyone who wants to find you, I guess it's mostly through LinkedIn.
Yeah.
And I'm sure you're happy to share further. Pulse Check podcast, of course, available online. Please like and subscribe. And with this, thank you once again. It was a pleasure having you.
Thank you, Salomon. Pleasure being here.
Thank you.